Hey, good afternoon and happy Thursday. I hope you're doing well. We have a lot to cover. We got state of the consumer with a lot of data coming out on Friday. We have the Fed Chair Powell's kind of first hint at what's to come in the Fed March meeting. And our question of the week this week is all about when to look at or explore hiring an attorney for estate planning purposes. For those who have maybe already caught this, that is, in fact, the new Girl Scout cookie flavor back there. So if you haven't already, definitely try them out. They're delicious. Anyways, we'll get into the meat of things here today. I want to start talking a little bit about the state of the consumer because we had so much coming out last Friday. On Friday, we had personal income come out, and that number was basically flat. So this was interesting to see just because it's not anything to write home about just for 1 month, but it is something that we need to see continue to pick up. It has been in the past. We need to see it continue. And the reason I say that is because at some point, if inflation continues to run really high and income either starts to slow down or, kind of peters out to some degree, what happens is it starts to create choices. So rather than being able to afford gas and going out to dinner, people start saying, hey, because of gas prices, I can no longer afford to go out on Friday night. So instead, I've got to save my money, consume less, basically, and spend that money on some of those necessities, right? So this is going to be really important to watch. We'll talk more about oil prices here in a minute, but definitely something to keep a close eye on. On top of that, we had consumer spending come out. So in the same breath that I am concerned about income raising, consumer spending did. So although we're not necessarily making more for the month, we spent more. It was slightly higher than expectations at about 2.1% and much better than the decrease that we saw in consumer spending last month. The third item on Friday that came out was inflation, basically at expectations. It was another 0.5% increase this month. Yeah, increase, right? So not running at that level, but an increase again. So inflation is obviously really a challenge. In fact, just on Tuesday night, we had Biden address the country in his State of the Union address. And one of the key topics, there's kind of two takeaways I got from it. One of the key topics or takeaways was that he reiterated multiple times that basically oil prices are way too high. We need to do something about oil prices. It was a huge focus of his, and I think will continue to be. And I agree. I mean, this is, we're now at over $100 a barrel. It has gotten extremely expensive. And obviously the Russia-Ukraine tensions are having a bit of an impact on that. Hopefully things kind of de-escalate overseas there. The other item that I took away was that basically he had suggested that basically COVID is mostly behind us at this point. He basically suggested that we can move on or we're behind the pandemic or beyond the pandemic, excuse me. I really hope that this is accurate. I would love to say that we're in a better spot here. Obviously, the case count from Omicron has come down significantly since those highs. So hopefully that is a great trend. Hopefully that continues and that we can, in fact, say that we are beyond the COVID pandemic. So go to sleep Tuesday night after the State of the Union, wake up Wednesday morning, and we've got Fed Chair Powell testifying. And normally this is not like a news-driven or a newsworthy item, but this time it certainly was. It did not disappoint. Basically, the gist of it is that he all but said that they are going to increase the interest rates by 0.25% or 25 basis points coming up in the March meeting, which is mid-March, I think March 15th. He had basically completely taken off the idea of a 50 basis point increase. And so on Wednesday, we saw the markets really react to that. Stock market pulled up, bond market liked it as well. Interest rates kind of dropped a little bit, sort of for the time being anyways. And I think that again, the markets really appreciated the idea that we can take that 50 basis point increase off the table. He had shared that he expects that inflation will peak at some point in 2022, this year, and start to actually pull back. He suggested that if that is the case, that will dictate their policy. He had shared that if their expectations are either too far ahead or behind what happens in reality, that basically they will move from the 25 basis point increase each meeting to be either more or less aggressive based on what comes out. So good news. if he sticks to this, is we can watch the inflation rate moving forward and get a very good idea of what may be to come, right? The last thing that I want to touch on is that he had also talked a little bit about the unwinding of the balance sheet. And this is extremely important. He has talked about a plan to get through that basically through the course of the year to a point where they're no longer buying. Now, keep in mind, no longer buying doesn't mean selling. It means no longer buying. So slower economic activity, basically, that they're adding in, right? What's interesting about this is that they are very clear that they want to communicate to us before they make any changes. And so coming up in March, it's probably pretty fair to say that they will not be suggesting any adjustments to that plan, at least not in the more aggressive sense. And if they are planning to do that in the future, we may get a very clear signal well ahead of time to let us know if that is in the cards. Right. What he had shared is that with all the Russia-Ukraine uncertainty, they don't want to add any more uncertainty to the mix. And so it sounded like he was trying to communicate this very, very clearly, and they will continue to communicate this very, very clearly so that essentially the markets, which, really shouldn't play much of a factor, but it does, will be able to handle this adjustment as it comes. Right. Okay, so as if that wasn't enough, we also start jobs week this week. We have ADP employment numbers that came out on Wednesday and basically suggested we added 475,000 jobs in the month of February. So for those who remember last month, the ADP employment numbers were wildly different than the non-farm payrolls. So it's hard to say what this means. Generally speaking, this can be a sign of what's to come. But obviously, we'll wait and see. But tune in next week, Thursday at 3 p.m. We're going to break down all things jobs. With that, I will transition from the markets to our question of the week, which is an awesome one this week. We talked a few weeks ago about when it may make sense to look at hiring an accountant. This week, we're going to talk about when it may make sense to hire an attorney for estate planning needs. And where I want to start before I even jump into that is to ask you the question, well, who needs estate planning really, right? Isn't that only for the ultra wealthy? The truth is everybody needs an estate plan, whether you have, your diary to your name or you have millions and millions of dollars, everybody needs some level of estate planning. Now, it may be as simple as, a quick jot down on a napkin, all the way to trusts and gifting strategies and all the above that comes with more assets, right? But everybody needs some level of it. And generally where I will start this is you may be able to do some of that on your own or through a legal service or something like that. But generally where an attorney may start to come into question, or you may want to start considering hiring an attorney, is based on two factors. One is wealth and one is complexity. So with wealth, the gist of it is if you are close to or over the estate tax exemption, it almost for sure warrants that it's worth exploring an estate planning attorney to help you out. Now, there's two levels to that. There's the federal level, which is around 11.5 million, I believe, right now. And then there's the state level, which is around 2.2, 2.3 million, somewhere in that range right now. So if you find your assets are close to that, your estate, which by the way is everything you own, then it may make sense to start exploring that. The second avenue is based on complexity. So that comes in all types of factors. It could be family dynamics, right? Maybe a blended family or divorces and kids, from different marriages. It could be your complexity of your assets. Maybe you have real estate in different places or assets held in different countries or trusts that you own, those types of things. Maybe businesses, right? It could be special needs considerations. If anybody in your family has special needs planning considerations to factor in, that adds some complexity as well. And last, maybe you have some philanthropic goals where you're considering trusts and gifting strategies and some of those more complex scenarios. So whichever side of that equation you're on, or potentially if you're on both, that is where I would suggest that you may want to really start heavily considering looking at an attorney for those needs. I hope that helps. We are really looking forward to seeing you next Thursday. We've got tons of stuff on the jobs front, so get ready. And of course, let me know if you have any questions. Definitely reach out to me directly or use the hashtag #AskBrandon if you have anything on your mind, and I would be happy to answer it in our question of the week. And if so, send you a copy on me for the great idea. So thanks so much for joining. Have a great day, and we'll see you next Thursday.